in. This will all be recorded for later viewing as well. So if you're watching this later, welcome. Sorry you didn't get to ask your questions live, but the whole purpose of this is to have live interaction with you. This is a Facebook Live. It's exclusively in the White Coat Investor Facebook group. And our goal is to answer your questions about disability insurance tonight. So you can give us those questions. All you have to do is post them in the comments below this live stream, and we'll answer your questions tonight. We'll be on here somewhere between 30 and 60 minutes, depending on how the discussion goes. If you have lots of questions, we'll be here longer. If you don't have very many questions, it might be shorter. So feel free to do that. I am here today with independent disability insurance agent, independent insurance agent, since he also does term life insurance, Bob Bhayani. He's been a sponsor of this Facebook group now for months and months. I hope most of you are familiar with him. If you need, if you have insurance needs, or if you know somebody who does, he would surely appreciate your business, even though he's a busy guy. You can get more information from him at drdisabilityquotes.com. It's in the ticker underneath this video, and you can go there and get a quote for term life or a quote for disability insurance there anytime you like, and he'll get back with you just as soon as he can. Tonight, however, we wanted to go over a bunch of stuff about disability insurance that you need to know. But you can interrupt us at any time and ask your questions, and we will preferentially try to answer your questions about disability insurance on this live stream. Bob, before we get started, I know you are on the, you're really at the epicenter. You just mentioned to me that you were at the border between Manhattan and New Jersey, and this is where our pandemic is probably the worst. Very different from what we're seeing here in Utah. But you, in your work, have had a lot of interaction with docs who've been treating COVID patients, who've been taking care of them, who've been exposed. And I wanted to start this out by just talking about how COVID has affected both term life insurance and disability insurance, people's desire to have it, their ability to get it, etc. Can you talk about that for a few minutes?
Sure, Dr. Dahl. Thank you for having me, and I want to thank your audience for spending the time to listen in and ask us some questions. I also want to thank everyone out there, fighting this COVID in the front lines, putting their lives at risk for us, including you, sir. Yes, in definitely New York, New Jersey is at the epicenter of it, and that has guided a lot of current updates and changes in the marketplace. So for example, let me talk about term life insurance for a second. Term life insurance has become very hard to obtain recently because of certain changes. I'll give you some examples. Some term insurance companies are no longer offering temporary insurance, meaning when you apply and if you give them a deposit, you're covered as of day one. Now they will insist on you going through the full underwriting process, and upon approval, once you pay the policy goes in force. They have set different guidelines for different ages. For example, a big portion of the term insurance companies are no longer accepting applications on applicants that are age 70 and over. They're also becoming much, much stricter with applicants that are between the age of 50 to 70 that have received some sort of a rate classification that is substandard or less than preferred or standard. And if you end up in that category, you're automatically a decline. Another very unusual change that is, if you have any foreign travel planned in 2020, you are straight up outright declined. Here's an interesting one. If you have interned a COVID patient, not been COVID positive yourself, simply interned a COVID patient or attended to a COVID patient, some companies will not let you apply for 90 to 180 days. So one of the positive changes that has occurred is that for someone that is applying for term insurance, they will allow you to use labs that you have done on your own within last 24 months. instead of insisting that you meet with a paramedic and a company-appointed paramedic who would come to your house or your place of work and do a lab test. However, what we're doing on our part to accommodate our clients and facilitate their requests is we're evaluating each client individually. We're having a conversation with them. We're trying to understand, the risk factors. We're trying to understand BMIs. We're trying to understand underlying health history, if they have been turned a COVID patient or not. So we go through a list of questions and answers, and if we see the risk or the possibility that a client would potentially face a decline or a postponement, we're discouraging those clients from applying altogether and asking them to wait. So those are some of the changes as far as term insurance and COVID is concerned. As far as disability insurance and COVID is concerned, there have been positive changes. The changes are they're completely waiving lab testing for applicants that are applying up to $10,000 a month of benefit. So normally when you went over $5,000 or $6,500, which are allowed limits for residents and fellows, you would be required to do a lab test and a urinalysis. Well, they no longer require that up to $10,000. $10,000 and higher, if you have a lab test done by your own attending within the last 24 months, they will accept that in lieu of. So that's definitely a positive change. Another very interesting change that we have seen is two of the major insurance companies have increased their limits, which the timing was very unusual, but Guardian increased their limits from $20,000 a month to $30,000 a month of benefit. Principal increased their limit from $20,000 a month to $35,000 a month. And these insurance companies are watching what's happening to try and see if they can make these changes permanent. In other words, never will you have to do a lab test if you're applying up to $10,000 a month of coverage, which I think would be a very positive change. Other than that, COVID-related issues, as far as underwriting disability insurance is concerned, they're being a bit more stricter with dentists. So what they're seeing is dentists have taken a much bigger hit than their physician counterparts, and their ability to recover financially is not as great as, from a business perspective or financial perspective as a physician. So some of the insurance companies have scaled back on financial underwriting guidelines for dentists, but that is a direct result of reinsurers. So reinsurers are companies that will come in and subrogate the liability or the risk that an insurance company is putting on the books. Majority of the companies like Ameritas, Principal, Standard do use reinsurers. However, a company like Guardian retains all their risk. So when you have a reinsurer involved in underwriting a case, you can't just go by your own guidelines. You also have to follow the reinsurer guidelines, and it's the reinsurers that are pulling the strings on some of these decisions pertaining to the dentists. Another positive change that has come about, not directly related to COVID, is majority of the times your J1 and H1B visa holders were getting country of origin exclusions. Well, insurance companies have done away with that. Unless your country of visit is one of the OFAC countries, to give you some examples, Iran, Iraq, Syria, Venezuela, then you're getting a country of origin exclusion. But other than that, if you are a H-1B visa holder from India or China or Europe or South America, you're not getting any country of origin exclusions, which to me is a very, very positive change. I'm very excited about that. But those are about some of the changes that have taken place, but they're quite significant in the bigger picture.
Awesome. Well, it looks like we got about 70 people with us here on the live version. Do me a favor, those of you who are watching, hit that like button. Send us some thumbs up there on Facebook, and that'll help spread the word that this is going on so other people can get this valuable information about disability insurance. And now let's get to some of your questions here. And there are a whole bunch of them. And so maybe we'll just do your questions tonight. If that's all we get to, that's fine. But let's take a few of these. I think the first one we have coming in here, let me scroll back up. Looks like it was, where'd it go? I think I've lost one of them, but there we go. Let me exit out. All right. This is a medical school graduate. So a brand new doctor. As a medical school graduate about to start residency, what kind of coverage and tails do you recommend a resident carry? And I think they mean riders by tails, I think is what they're talking about.
Correct.
So I think that's the best time to buy your coverage as you come out of medical school, as you're an intern. What do you recommend they buy?
That really boils down to the medical specialty, the state that you reside in. So the best route to take is, contact an independent broker like myself, get all your options lined up in side by side, do a comparison, get a deeper understanding of what those options represent, and then decide for yourself if this is a suitable fit from a budget perspective, because majority of your graduating med students haven't had a paycheck yet. They probably won't get their first paycheck till mid-July, which is fine, because if they applied now, by the time they get approved, we can get them a good 15 to a 30-day extension to make their first premium payment. But what kind of coverage is very specific to your medical specialty, to your gender, to the state that you reside in, and your own particular risk profile. Are you a head of the household? Are you single? There are a lot of moving parts to disability insurance, and due diligence is very critical and very important, before you make a decision.
Now, a common question I get related to that is people get into residency and they realize that one of their benefits is a group disability plan. Can you talk in a general way? Obviously, every policy is different, but can you talk in a general way about the advantages and disadvantages of these plans that are offered in a residency program?
Sure. A lot of your residency programs from your large institutions offer group disability insurance. However, the problem with group disability insurance offered during residency, well, here's the good news. It's free. The bad news is try collecting on it. The bar to qualify is very high. It's not own occupation. So if you can do anything besides what you were doing, they're not going to pay you. It's a 6-month waiting period. It's a taxable benefit. It has a cap of $2,000, which net of taxes amounts to almost nothing. As far as the insurance companies are concerned, they completely disregard the group coverage that you have through residency, because they know fully well how hard is it to collect on and how unreliable it is. So they just give you a blanket $5,000 policy regardless of the amount of group coverage you have. So I would never discourage anyone from not taking any free group coverage they get, but I wouldn't go exactly relying on it, because in my career, I don't know of a single resident that's collected on a group disability policy.
Now, you don't know a single resident. So when somebody brings, when they come to get their insurance options evaluated, presumably they're bringing what is offered at the hospital, what's offered in the residency program. Have you ever seen a policy that you said, you know what, that one's actually pretty good, maybe you should just use that until you become an attending?
No, unfortunately, all of these group policies are very similar. And they all tend to have the shortcomings of a typical group disability policy: no rights of ownership, taxable benefit, not true own occupation, not portable once you leave residency. And my bigger concern would be that if you're entirely relying on residency provided coverage, here's something that I have noticed, which is, as residents, they're working 60, 70, 80-hour weeks. They're not sleeping properly. They're not eating properly. They're not exercising. So they're more prone to develop symptoms or a chronic diagnosis during the residency, which then, when you finish your residency and try to apply for a private policy, gets in the way of you being able to secure a private plan. So get a policy, albeit a small policy, a $2,000-3,000 policy versus a $5,000 policy that you are allowed to get, but get something, lock it in.
All right, let's take another question. This one's a very specific question, obviously. This is from a doc who had cancer in medical school. It was a skin cancer. It was cut out, hasn't been back for 4 years. It's got an excellent prognosis, a 99% survival rate, who has a policy with a company called Hanley. I don't know Hanley, but with a 5-year benefit of $10,000 a month, it sounds like. So $10,000 a month for 5 years. We have to reapply after 5 years. What advice would you have for that doc with a history of cancer?
Well, I'm glad that doc has a policy. I'd get it evaluated because for a medical student to get a $10,000 a month policy, it doesn't sound right. So get it evaluated. However, in the private marketplace, you may not have many options now because you're 4 years out. Now, once you're 5 years out, that changes the picture. Between 5 and 10 years, depending on your medical records, depending on the insurance company and the underwriter, they will give you some sort of a limited offer, let you in the door, and then as you prove, good health and no recurrence, you're able to appeal your way to a better contract. But you'd still want to end up waiting at least a year before you go through that process. Another word of advice that I would give this doc is do a pre-screening before you apply. What I don't want to see is you getting a decline on your record. So you went and applied, with an enthusiastic agent who meant well, but you ended up with a decline for some reason. Now that goes on your MIB file for everyone else to see. So if for some reason your employer offers a GSI plan and you're declined, you can't get the GSI plan because you got a decline from a private insurance company. So the better approach to take would be to pre-screen your medical records with an insurance company to get an indication of how they would approve you and determine is that satisfactory. And if it is, then move forward with a formal application. But if you get a postpone or a decline, at least it won't end up on your record for anyone to be able to see.
Now, how often do those pre-screenings not work out? Meaning they tell you in this pre-screening that, yeah, we'll issue a policy. And then when the underwriting comes back, they don't. And now you've got this black mark against you the rest of your life. Does that ever happen? It
does happen. Absolutely. If you have incomplete medical records, if you have incomplete information, if you've overall done a loose job of pre-screening, sure, absolutely. The insurance company could come back and say, oh, sure, we may give this guy an offer of XYZ. But then when they get the application and they look at this additional information and mitigating circumstances, they may very well turn around and say, we're not going to insure you. And that's something I'd be very careful about, which is one of the reasons I don't take pre-screens lightly, because this is your future that I'm putting on the line in terms of insurability. So a thorough pre-screen, and we have relationships with underwriters. We have dedicated underwriters that are assigned to us. So there's no reason for us to be dishonest or withhold information. So I feel that honesty is the best policy in terms of getting an accurate indication. And that's all it is an indication. It's not a guarantee, but it can turn into a guarantee if you've supplied all material facts and records and been as forthright as you can. That definitely improves the chances of getting a favorable outcome. Good news is you've got a broker, an experienced broker like myself, who would thoroughly vet that information, discuss it with the underwriter, see if the underwriter needs more information. He may see something and say, oh, well, this test was ordered. Where are those results? So be as detail-oriented as possible, just to ensure a favorable outcome if you were to apply.
All right, let's take our next question from a viewer here. They're asking about obesity. What about obesity? Asking for a friend. Well, whether you're asking for a friend or not, let's hear about how hard it is to get disability insurance if you're obese.
Obesity is something that we come across very frequently. Once you have a BMI of over 30, insurance companies tend to cut back. Now, it depends on how high your BMI goes. If you're at a BMI of 40 to 45, you're a decline. You have no business even applying. If you're somewhere between 30 to 40, again, a pre-screen would be a good idea. You also, what underwriters take into consideration with obesity is comorbidities. Do you have blood pressure? Do you have hyperlipidemia? Other various factors, go into consideration before they give you a decision. But the most likely outcome for a individual with a BMI between 30 to 40 would be a modification of benefit period. So your typical policies are payable to age 65, to age 67, to age 70. Well, an insurance company will take that and modify it down to 5 years, 10 years, 2 years, depending on the degree of underlying medical conditions over and above obesity. Now, the good news is that that's a good starting point. You've got your foot in the door with, let's say, a 10-year benefit period, which then gives you the ability to actually lose the weight and go back to the insurance company and show them that and demonstrate that you've lost the weight, you've sustained the weight loss, and are able to file an appeal for an improvement in the policy provisions. But that's typically how obesity is looked upon overall.
All right, let's take another one. This person's asking, I bought an own occupation disability insurance policy from Guardian just prior to finishing fellowship for $8,500 per month for $273 per month. So $8,500 per month benefit costs them $273 a month. My current employer offers own occupation for $8,500 per month, so same benefit, but it only costs $95 a month. But the insurance is not portable. Is it worth changing the disability plan even though I may not stay with my current employer long term?
Absolutely not. I would not give up that private policy in lieu of a employer provided policy, no matter how cheap it is. There's a wonderful article written in White Coat Investor called "You Get What You Pay For." And I read it and it was brilliant. I absolutely agree with everything that is stated in there. And, disability insurance, like anything, is it's a commodity. You get what you pay for. Now, your Guardian policy is one of the best policies out there in the industry. And for you to take that and substitute it with an employer-provided policy, which costs a third of the Guardian policy, should make you wonder, well, what are you giving up besides portability in order to get a rate that's a third? It's not that the employer is paying the other 60-70% of the premium on your behalf. That's the entire premium for the policy, and there's no possible way that a group discount could be 60 to 70%. So then you've got to ask yourself a question, what am I giving up in order to get this policy? And what happens when I leave this employer? If I have developed some sort of a chronic medical condition by the time I change jobs, how am I going to get another policy to replace that employer-provided policy? And a suggestion would be that rather than give up the $8,500 policy for any additional coverage that you want, perhaps you add the employer-provided coverage over and above the Guardian policy that you have. But I would discourage you from giving up that Guardian policy, because it is a good policy. They're fully underwritten, guaranteed, renewable, non-cancelable. So there's really no ifs, ands, or buts when you file a claim. Whereas with a group policy, you get in the door, they don't ask you any questions. Well, guess when they ask you the questions? When you file a claim. Now that's pretty risky. And that's why I would recommend keeping what you have and perhaps using the employer-provided plan as an additional supplement rather than a substitute.
All right, let's take another one here about mental health issues. If there was a resolved mental health issue decades ago, would that be a risk for being denied? If we do not see it being a factor, this is the second question. What do you think? Decades ago, is that a risk?
Not at all. Decades ago would not be a risk, but a recurrence would absolutely be of consideration. So you had something 15 years ago, it recurred 7 years ago, again, there's a very high probability that you will get a mental nervous exclusion, which is one of the easiest exclusions to appeal. So if you file an appeal in 2 to 3 years, the odds of a successful removal of that exclusion are very, very high. Now, when we do see declines with mental nervous conditions, but here are some of the examples. Multiple medication changes, upping of the dosage, self-prescribing, non-compliance. My doctor told me to take this SSRI, but I felt I didn't need to. Those are the reasons that become, that lead to a decline. But not something you experienced as a medical student that was, transitory in nature. That does not result into a decline that quickly, no.
Okay, so here's the follow-up question from the same asker. If we don't see it being a factor for disability, can we just not disclose it? What risk do we run if we do so? Can you talk about the risks of not disclosing medical issues or dangerous hobbies?
Sure. There's willful omission and material misstatements. Those are considered fraudulent under insurance guidelines. So, some of the advice that I give physicians is, think of how hard you work to get that medical license. Now, would you want to risk that for an insurance policy because you didn't reveal your medical information? Because after all, it is insurance fraud. And you're gift wrapping an excuse for the insurance company not to pay because, when you file a claim, they're going to investigate. And if they chance upon that information, they're going to use that against you. So I would rather you admit it and let me deal with it, or you end up with an exclusion and we appeal it, rather than not disclose it at all, which is just pretty much giving them an insurance company an excuse to deny your claim. It's just not worth it.
What about on the term life side? I mean, isn't there a 2-year contestability period, and after that they can't do anything about it? How does that work?
Correct. 2-year contestability period is typically applicable for errors and omissions. It's not meant for fraud. There is no statute of limitation on fraud. So I would be as forthright with the insurance company, and that's where your discussion with your broker becomes very important, where you have a detailed discussion. And again, use the pre-screening process to see what the potential outcome can be, rather than take a risk and end up with a decline, or take the other kind of risk, which is not to disclose it at all. I have seen 2 claims in my lifetime get contested for term life insurance. In both the instances, the applicant had lied about their smoking habits. So it wasn't that, we'll adjust the rate to a smoker and pay you the difference. They completely outright denied the claim. So I think it's absolutely worth admitting all the information. And of course, asking your broker, is admitting this kind of information going to lead to adverse action? And if the answer is yes, then walk away, rather not apply. Look at some sort of a guaranteed issue type situation, rather than take a risk in making misstatements to an insurance company and putting yourself in the odd situation where they could deny your claim or accuse you of fraud.
Okay, we're about halfway through this Facebook Live. For those who are just tuning in now, I'm talking with Bob Bhayani. He's an independent insurance agent. If you need his help or have some questions about your own coverage, you can find him at drdisabilityquotes.com. We've got about a half hour left here. So if you want your questions answered by Bob on this Facebook Live, make sure you get them in. You can just type them right into the comments section there in Facebook, and we'll try to answer as many of them as we can. If we run out of questions, I'll start making some up. But for now, we still have a few questions to get through. So let's take them. This one comes from a graduating resident in internal medicine that came from Nepal. Has a question about visas and disability. So what happens if a physician on visa gets a disability and then loses the visa? And also wants you to elaborate on a disability visa waiver if you can.
Sure. So This has been a very interesting topic of conversation with many foreign physicians that are on J1s and H1B. Now, I have come across situations where a couple of physicians that got disabled and were no longer able to work or were able to apply for a visa waiver. Now, I am not a immigration attorney, so I don't know the particular details of it, but from what I understand, it is not treated the same as a termination of employment. So that's one provision. The second thing that I have seen with two of my physicians that actually moved to Canada are practicing another form of medicine other than their own specialty and collecting the full benefit. So if your visa situation does not work out where you can stay in the United States, you definitely, there's an enormous demand for physicians in Canada where you can go to Canada, become a physician, and yet be able to collect on your US-based disability policy, which you cannot do in other foreign countries. So those are some of the things. Now, the good news, as I shared with you earlier, Dr. Dahl, is that the insurance companies were issuing country of origin exclusions to visa holders. Well, they've stopped doing that. They are no longer issuing country of origin exclusion. So you are able to go to your country of origin and if God forbid something went wrong, able to file a claim. The only condition is that you must be in United States for 6 months at a stretch so that you can demonstrate compliance to treatment, rehabilitation, and so forth, which is very hard to do when you're overseas. Those are the factors typically that a visa holder should consider. But again, a deeper conversation with a broker before you apply would be in order, rather than take any chances with the unknown.
So can you explain that a little bit better? It will pay if you get disabled in the United States and then relocate to your country of origin, but you still have to come back?
It won't. If you get disabled here and you go back to your country of origin and you're there for 6 months or longer, then it becomes, then the insurance company would cut off the claim because they don't have a way to monitor compliance and rehabilitation. So they require you to be physically present in United States to continue collecting. Now that raises the question, well, what if I've lost my visa? Well, then your second best alternative would be to go to Canada because they will allow you to stay in Canada and collect the full value of the claim if you don't have a visa to stay in the United States.
Is there any policy you can buy that wouldn't have that issue? Or is that pretty much all the big 5 or 6 companies have that requirement?
Yeah, the top 5 do have that requirement, and this all came from quite a bit of fraud that occurred 15, 20 years ago, where you had visa holders that came to the United States, bought policies, and thought it was a retirement plan, went back to their country of origin and filed claims and sat there and collected those claims without the insurance company being able to verify the validity of that claim. So the insurance companies did something about it and put forth these changes to protect themselves against such unforeseen circumstances.
Okay. Let's take our next question. Is there a reason to get quotes from multiple insurance agents, or do the independent agents all pull from the same information?
We pull from the same information. Insurance rates for all the brokers are the same, no matter how many brokers you talk to. Now, the one variable is discounts. Discounts can vary from broker to broker. Depending on the amount of volume that the broker does with an insurance company, the broker is able to negotiate higher or lower discounts. But putting the discounts aside, an insurance company cannot charge a lower rate to Bob compared to Joe. That's just illegal. So you must do your due diligence. I think your consideration in shopping is not as much the rate as the broker that's going to represent you and give you the service and give you assistance with that policy even once you purchase it, because rates are pretty much universally the same for each broker.
Okay. There's another question for us. I think we covered this one earlier. I'm starting residency in June. My program offers a policy. Should I buy my own short-term policy? Well, this is a different question. There's actually two questions here. First of all, you probably shouldn't assume that your program's long-term disability insurance is adequate. But since we already addressed that, let's talk about the short-term disability issue. Do you think a resident ought to buy short-term disability insurance?
Yes, if your employer offers you short-term disability, depending on what the premiums are, I would encourage you to buy it because obviously there are more short-term disabilities than there are long-term disabilities, statistically speaking. Majority of your employers will give you short-term disability at no cost, and majority of the states where you reside will provide you with short-term disability 90 days to 180 days. As a part of your tax payments to the state. So you do have protection that you may want to analyze. You know, what does the state give me? What would the employer give me, and what would that cost me? You know, those are the considerations. But I think there's definitely a time and place for short-term disability because it can't be as readily purchased in the private marketplace.
Yeah. And certainly that need can be met if you have a 3 to 6 month emergency fund. But most people coming into residency don't have that yet. It takes at least a few months to save that up.
That's correct.
All right, here's our next one. Are premiums going to go up because of COVID-19? Would you say the premiums are actually higher now or just a little more difficult to get the coverage?
Neither. The premiums are not higher. Well, not yet anyway. It's not more difficult to get coverage. You know, unlike the statement that I made about term insurance, where if you've interned a COVID patient, some insurance companies will postpone you for 90 days to 180 days. Well, not so with disability insurance. With disability insurance, as long as you're not COVID positive, they will let you apply. They have not changed the rates. I can't say what's going to happen in the future because I have been hearing of you know, young 20 and 30-year-old COVID patients stroking out because of the saddle embolus that they're finding in people's lungs that travel and stroke out these young patients. Not sure what effect that's going to have on the actuarial data, but we won't know that till next year. But as of now, no changes whatsoever.
You know, Bob, you're revealing that you're not a doc. Saddle emboli are bad and stroking out's bad, but one doesn't necessarily usually lead to the other. Let's talk about stopping your policy, ending your policy. What point do you not need disability insurance anymore? When is it time to cancel your policy?
Financial independence. You know, if you've achieved financial independence, I think that is a good time to take stock of your disability insurance. However, you know, you want to take into account other factors like health. You know, if you're 50 years old and you have $3 million in the bank and the kids are grown up and the mortgage is paid off, but you have underlying health conditions that could potentially lead to a disability, then regardless of your financial independence, you should not be giving up your disability policy because of the higher probability of collecting. But
you think it's a good bet at that point?
Exactly. But everything else being equal, you're pretty healthy and you've built up a nice net worth, or you're a 2-physician family, by all means, you know, when you achieve that financial independence, go ahead and cancel the policy.
What if you get into your 60s, you're maybe not yet financially independent, but now this policy is only going to pay for a couple more years? Is it really worth the premiums at that point, do you think?
I don't think so. Unless there is some underlying health condition that could lead to a claim, I don't see the point of paying a policy after age 60. It really doesn't make that much sense, unless, of course, there's a probability of actually collecting on a claim.
Okay, let's talk a little bit about military docs and options available for military docs. I get this question all the time, and I basically answer it by saying Mass Mutual. Can you get, here's the question from the viewer here. Can you get disability insurance while on active duty?
Yes, you can. You can get disability insurance while on active duty from Mass Mutual only if you're stateside. and if you don't have orders, your deployment orders. So you're absolutely able to get a policy when you're stateside active duty military. For military residents, you can get $2,500 a month. For military attendings, you can get, in relation to your income, a percentage. It's not 60% as civilians. It's a complicated formula, but you are able to get a higher amount than $2,500 a month. But what you are able to get, in spite of that low issue amount of 2,500 or 3,000 or 4,000, is a multiple and future increase option. So granted that they're not going to give you a big dollar amount to start with, but they are going to give you the guaranteed ability to double, triple the size of that policy as soon as you become a civilian without having to go through any medicals, regardless of your change in health. Another thing that happens with military physicians is that, let's say you went and purchased a policy from MassMutual for $2,500 a month, and then you got deployed. Well, you can call your broker and put the policy in suspension and no longer have to pay it. And then when you come back, when you're stateside again, you're able to pick that policy up as if to say you never let it go. So we had this happen to a physician recently, where he got deployed. He had no idea that he was able to avail of this feature. So retroactively, we got him reimbursed $7,000 of premium that he would have normally not paid had he put the policy in suspension. So Guardian was very honorable in going back and making good on that promise. We were able to get that exception for him.
Very nice. And to those of you out there who are military docs, thank you for your service. It probably won't be until you're out before you realize just how much of a sacrifice you were making. All right. Here's another one. This is a question I actually get fairly often. It's about the residency question. There's this idea going around that if you get your disability insurance before graduation, it's better than if you get it immediately after graduation. Can you talk about that? Is it better just before or after you transition into your attending job? Does it matter? And I bet location plays into that quite a bit as well. So why don't you address all of that?
Absolutely. So it does not make as big a difference anymore if you buy it a month before graduation or a month after graduation, because they still give you 90 days to get the policy in place. And from what I got notified from Guardian, they've extended that to 6 months. So they're effectively going to allow you to get that residency training discount even after you have left. Now, having said that, what we have noticed is that once you finish your residency, you're busy packing, you're busy moving, you're busy preparing for board exams, you're busy settling into a new town, into a new practice, into a new position. So there is so much going on in your life that often disability insurance is not a priority. So if you have the time and the wherewithal, get it done sooner rather than later. Now, the mitigating circumstances to that are, let's say you're moving to a state. For example, I have a client currently who is going from Hawaii to Massachusetts. Now in Massachusetts, rates have gone unisex. Now he's a male applicant, and unisex rates for male applicants are not favorable. So we're going to get him underwritten as a Hawaii resident, yet get him the discounts affiliated with his residency, even though he's moving to Massachusetts. Or let's say you're moving from New York to California. California has 30% higher rates. So it would make sense for you to secure the California rates, lock them in before you move to California. This way you're guaranteed those lower New York rates. It's like anything else, prioritize it, but of course be sensible about it in terms of budget needs. Doing it sooner rather than later, from what I've seen, makes it easier, but by no means is it a necessity to do so. You have time after graduation.
Why in the world would it cost 30% more in California than New York?
Do you know, you're going to laugh if I tell you the answer, because the weather is beautiful. Statistically and actuarially proven that claims in warmer states like Florida and California, folks tend to go on disability and never come off of it. Another issue with California is adjudication of claims. It is very hard for insurance companies to adjudicate claims in California because of certain stringent laws that are in place over there. So there are some insurance companies that don't even do business in California, and there are other insurance companies in California that just outright charge 30 to 35% higher. So if you're on your way to California, or if you're on your way out of California, make sure you get a non-California rate.
You know, I think with this question, I need to throw a lecture in here. You're asking the wrong question if you're trying to decide whether you to buy it at the end of residency or the beginning of attendinghood. This should have been bought several years ago when you were an intern, right? You're already late, and delaying this a few months more. I mean, what if you get disabled? People get disabled in residency all the time, and putting this off 2 or 3 or 4 months until you're an attending and have more cash flow, you're just asking to be one of those people that gets disabled in those few months. And I run into people all the time who are disabled without disability insurance, and it's not good. It is very difficult to qualify for Social Security disability benefits, and they're not very high. It will be a significant drop in your income, even from your resident income, to be living on Social Security if you can even qualify for it. So if you're asking that question, you probably need to go out and get disability insurance yesterday. All right, here's our next question. It talks about the taxability of benefits. Is disability insurance benefit taxable income?
So I saw a posting on the White Coat Facebook page the other day, and I couldn't find it again because I wanted to answer it. Someone suggested that you could take the disability insurance premium and write it off, and all that's going to do is it's going to make the benefit taxable. You're absolutely wrong. What you've done is you've taken a deduction on something you're not entitled to. Disability, personal disability insurance policies, private disability insurance policies are absolutely not tax deductible. If you get audited, they will reverse that deduction. They will charge you interest and penalties on it. So it's not even an option for you to write off the premiums for disability insurance. Having said that, disability insurance payouts are tax-free. So it's not as simple as, well, if I take the deduction, the payout becomes taxable, but if I don't take the deduction, the payout is tax-free. The latter is just not an option. No deductibility as far as personal disability insurance premiums. Even if you're a 1099 contractor doing line item deductions, under no circumstances can term life insurance, any kind of permanent life insurance, personally owned, or disability insurance premiums be written off against your income.
All right, here comes another visa question. This is a doc on the front lines. This is a pulmonary critical care fellow on a J1. Who's been seeing a bunch of COVID-19 patients and is wondering, what happens to my dependents in case of my death or disability? Will my family be compensated? If not, is it worth it at all for physicians on visas to have life insurance?
Physicians on visas, with as far as life insurance is concerned, is a mixed bag. So by that, what I mean is there are some insurance. So J1, with J1 visa holders, your choices are extremely limited. Majority of the companies will not even underwrite you, and the ones that will underwrite you will not give you the best rate, which is the elite or the preferred rate. They'll give you a standard or a substandard rate. With H-1B, the choices are better, where you're able to get a policy from more companies, but again, they do the same thing. They knock down your rating from elite down to a standard rate, which is a difference of about a good 20, 30%. But there are some good quality companies that we are aware of that will give you the elite rate, but it definitely narrows down your choices from, say, 15, 20 companies down to 3 companies. Yeah, they will absolutely pay the claim if you have an active policy. Regardless of your visa status, the policy will pay a benefit, and that benefit will be tax-free. So I think it is very important for you to insure your family and protect your family using term insurance, regardless of your visa status, because it's not about you, it's about your family.
All right, our next question comes from an orthodontist who's just getting disability insurance placed and wants to know your thoughts on Guardian's fancy new rider, this lump sum rider. Brokers seem to be pushing it, in addition to the COLA rider and the others, do you think it's worth paying money for the lump sum rider? And why don't you start with explaining what that does, and then your thoughts on whether it's worth it or not.
Sure. So a lump sum rider will give you a lump sum of money over and above the monthly payment that you get. So let's say your benefit amount is $5,000 and your lump sum rider is $100,000. Not only will they give you the $5,000 a month in case of a disability, they will cut you a check for $100,000 as long as that disability, I think, lasts 6 months or a year. I have to check my facts. It's like anything else, right? So you've got retirement rider, and you've got cost of living adjustment rider, and you've got student loan repayment rider, and you've really got to weigh the benefit versus the cost. If you're head of the household, there's a genetic predisposition in your family for certain diseases. You feel the need to have that extra cushion. Sure, by all means, get it. If none of those, factors exist, then you may want to question yourself and say, well, what do I need? It's not a matter of what the broker wants to sell you, but you're smart enough. If you're smart enough to become a doctor, you're smart enough to determine what you feel is a need in terms of certain riders, like the lump sum rider. I frankly haven't sold a lump sum rider in a long time because I'm more of a no frills guy. Working with residents and fellows, I always strive for value. For example, COLA rider. And now this is a question you've asked me before. What are my thoughts on COLA rider? Again, it's an individual situation, because let's say you're a husband and wife physician, a dual physician family. I don't see a need for a COLA rider, because your working spouse is your cost of living adjustment. The way I put it is, say you have a benefit of $10,000 a month and you got disabled, not having the COLA rider is not going to put you at starvation's door, because your physician spouse is still out there working and making a decent salary. On the other hand, if you're the head of the household, you have 3 children, a wife that stays at home, maybe you should have the COLA rider, in terms of protection. Now, the thing about the COLA rider is you can buy the policy with it and drop it, but you can't add it later. So those are the considerations. When you're evaluating the riders, you really have to see, does the rider make sense? There's another rider that you've asked me about is the catastrophic rider. Now let's evaluate the catastrophic rider. So catastrophic disabilities are covered regardless. So, if you had any kind of a catastrophic disability, your base benefit, $5,000, $10,000, $15,000 a month is going to get paid. If you had the catastrophic rider, it would give you an extra payment of $8,000, $10,000 a month. Now, the problem that I see with catastrophic rider is, in order for you to qualify, you've got to be unable to do 2 out of 6 activities of daily living: eating, bathing, toileting, transferring, continence. Those are ADLs. Now, the problem with that is that 99% of the claims that come in for catastrophic disability claims are from neurological disorders that are adult onset: dementia, Alzheimer's, Parkinson's. So what's the point of paying for a rider for 30 years? Then your policy ends at 65 and you get diagnosed with dementia at age 80. You're never going to get paid on it. So again, you now tell me you have a genetic predisposition in your family for neurological disorders, and by all means, go out and get yourself a catastrophic rider. But that's more the exception rather than the rule.
I think what a lot of people fail to think about is that it's not, do I get this rider or not? It's, where do I spend my money? Do I buy more base benefit, or do I buy less benefit plus the rider? And I think if you put it in those terms, most people will say, well, I'd just rather have more base benefit.
Okay.
If they're not already buying a max level policy where that's limited, it seems like in a lot of cases, that's the place to spend more money if you want to spend more money on disability insurance.
You make a very good point, James, because let me explain. So with some of these riders, you've got criteria that you have to meet. So if you had a student loan repayment rider, first of all, you have to have student loans. Second, they have to be public. Third, they will only reimburse the dollar amount that you were repaying. So even if your student loan repayment riders for $2,500 a month, but you were repaying $1,000 a month, they're only going to reimburse you $1,000 a month. But following your advice that you just gave, which is to have a higher benefit, you'd get the higher benefit starting the 91st day with no conditions. They're just going to give you the benefit, and then you can take the dollars and allocate them to what you see, is a need. For example, repaying student loans. So I completely agree with you that I'd rather you buy a higher benefit than have all these extra riders in the policy with all these stipulations to qualify.
All right. Let's take another question here. This one's, which states have gender neutral pricing? I keep getting told this will go away. Can you talk about the status of gender neutral pricing?
Yeah, it's very interesting. So for many, many years, insurance companies, one by one, were doing away with unisex rates. Now, there is something new on the horizon where state of Massachusetts just passed a law where every policy issued in Massachusetts, if you're a part of the compact state agreement, you must issue unisex policies. Now, that's very favorable for female applicants, but it's not as favorable for male applicants. Is it going away? Well, that really depends on legislators. Now, from what I've heard, New York, New Jersey, Connecticut, they're all watching the Massachusetts model to see how successful it is. And if it is in fact successful and sustainable, then they want to adopt it. If that happens, you could have quite a few companies issuing unisex rates throughout the country. If that doesn't happen, I could see it just going away altogether, where none of the states would allow you, or rather the insurance companies would offer unisex rates. It's not clear. It's not very clear as of yet, but you are able to get unisex rates in limited circumstances from Principal if you're an attending, from Mass Mutual, regardless of the state, if your faculty is on their approved GIN list, they call it, or if you're a resident of Massachusetts, or with some companies, if you're a resident of Ohio. So there are certain pockets of exception. Question is, how permanent will they be? Don't know.
Okay. All right, let's talk for a minute about pregnancy. Can you get a policy while you're pregnant? Is it best to get it before you get pregnant? How long do you have to wait after you're pregnant before getting one, et cetera?
So absolutely, you're better off getting a policy before you get pregnant. Now, having said that, pregnancy is not considered a disability, but complications thereof are. So, the way I see it, you definitely are better off buying the policy before you were pregnant. But if you're in the first or second trimester and you do buy a policy, all they're going to do is going to give you a pregnancy exclusion. Now, what they'll state is that after a normal pregnancy, 30 days after a normal pregnancy, we'll remove that exclusion. That's if you apply while you're pregnant. If you're in the third trimester, they will quite simply postpone your application. So again, an individual analysis of your particular situation is very interesting. You asked me that question because I had an existing client whose wife is a physician, also a graduating resident, having a baby this month, contacted me a month ago, and I told him, because she's in the last trimester, we're going to have to wait till she graduates. And his fear was he would lose the discounts. And I assured him that that wouldn't be the case. So we're simply going to wait for her to have the baby. And then 30 days after she has the baby, we're going to set up the policy for her. Matter of fact, we could even start the application process right after she has the baby.
All right, we're running out of time here, so we're going to go into a little bit of a lightning round and see if we can give quick answers to the rest of our questions here. I'll take some and I'll give you a few. If you buy and get disabled and you're a resident, it would only pay out your residency salary rate. Well, it would only pay out what the contract says it's going to pay out, which is likely based on your residency salary. I think the most you can get as a resident is about $5,000 a month benefit, right?
Correct.
Okay, the next one's, I got an own specialty disability quote, $1,180 per year with a COLA rider for a $5,000 a monthly benefit. Is it a good deal? Well, it comes down to what else you're eligible for. I don't know your age. I don't know your medical condition. If you went to an independent agent, they should have shown you several policies and the pricing on them, and you would know whether it's a good deal. If you went to a captive insurance agent, and they only offered you one policy, then maybe you don't know if it's a good deal or not. So always make sure you buy these from an independent insurance agent. All right, here's one for you. Can you talk very briefly about disability insurance that's occupation specific for psychiatrists? Since most disabilities are for physical ailments, do they actually pay out to psychiatrists?
They do. For psychiatrists, the consideration of an own occupation policy comes down to, are you the type of person who got disabled and who's just going to sit at home? Or are you the type of person, let's say, would try and do telepsychiatry or do some research or do some teaching? What an own occupation policy would do is it would supplement that income from that other occupation to bring your income back to your pre-disability earnings. I hope I'm answering the question correctly, but from what I understand, I think that is the answer.
Yeah. Okay. Obviously, there are disabilities that will keep someone from practicing psychiatry, even if there might be fewer of them than will affect an ENT surgeon. But that's part of the reason why it's cheaper to buy when you're a psychiatrist than when you're an
Correct.
ENT surgeon. Yeah.
Correct.
Okay, here's another one I think we hit earlier. Do your premiums change significantly once you graduate from training? Not immediately, but within 3 to 6 months they will. So if you're asking this question, you're already too late. Go buy some disability insurance. Okay, here's another one. This is interesting. I haven't seen this one before. For surgeons and proceduralists, is it common to have specific writers for your back and hands? I don't know, something like a concert pianist might insure their hands or something.
No, I mean, from what I've heard, there's no additional riders to insure your hands as such. The policy covers you, whether it's a fine motor issue or whether it's a musculoskeletal issue. I mean, it'll pay. I had a neurosurgeon ask me to look into a policy on his hands with Lloyd's of London, but those policies tend to be very limited and have got to get renewed every 3 to 5 years. So I don't see the need to go out and get additional policies just to insure your hands. I'd rather just insure your whole body, regardless of the condition, and pay you if you're not able to work as in your own specialty.
Awesome. All right, let's take our last question here. And it's not really a question, but I think it's just asking for you to comment on the topic. Disability insurance for lawyers.
Lawyers.
Can you talk about maybe what's a little bit different for an attorney versus a physician?
Unfortunately, I wouldn't know because I only deal with physicians. But I mean, I could see, someone like a patent lawyer or, a super specialist, if you will, in a law practice, getting disability insurance. Typically in law practices, the high earners tend to get disability insurance and the rest of the folks don't, from what I understand. But again, it's like any other profession. If you can't go out there and practice law in the courts or what have you, it'll pay. I'm not exactly sure what a lawyer would do it's an own occupation situation. If they're disabled as a patent lawyer, what else could they do? Maybe teach law. Sure. I mean, I think a lawyer should have disability insurance to protect their income, especially if they're a high earning attorney, but really don't have too much experience with it.
All right. Well, Bob, thank you so much for coming on here and spending the last hour with us. I think this Facebook Live has been very helpful for the viewers and getting answers to their specific questions. I know we didn't get much to many of the questions that were on my list, but that's okay. I'm much more interested in getting the questions answered that our viewers actually have. As I mentioned earlier, if you are interested in getting a second opinion on your insurance, or if you are one of those who just hasn't put it in place yet, you can contact Bob at drdisabilityquotes.com. Thanks again for coming on the show.
Thank you, sir.